informational, and very reliable. Like that's the whole focus. The focus is always about the community and the partners. And so back to the idea that, you know, kind of all these Web 2 brands chose Polygon and came to us. It's like, well, why do they do that? It's like, well, when we go in and we talk to these folks, we say, we're here to serve your community. And it's just a very different pitch. It's like, what do you need? How can we best help you and bring you into Web3 and further mass adoption? And I've literally heard the opposite pitch, you know, where people come in and say, here's the most amazing, incredible, elegant tech. And to be honest, the blockchain technology is so complex, it just doesn't hit. It's like, you know, I don't need to know the nuances, the aspects, the tech behind the iPhone. I just need to know it's super reliable and it's very easy to use, and that is Polygon. And I think that that's really resonated with a lot of brands, and that's why they choose Polygon. It's like really, they know that we're a reliable partner to help them serve their community. And so I even heard, it's almost funny, I heard somebody come to us and say, hey, you know, you guys are kind of like corporate now, like Starbucks and MasterCard. It's like really not the crypto ethos. Well, if you think about these guys, they're all communities. Like Starbucks is a community, right? Reddit is a community of people that we serve. So I would say within Polygon, we just look at it as a broadening of our ability to serve diverse, different sets of community. It's very inclusive. Like I never want to see like, you know, crypto Web3 people say, oh, Starbucks, that's not our community. By the way, there's probably a lot of overlap. Nobody wants to talk. You know, I love my grande white mocha.
We're all addicted to stimulants of some kind.
Yeah, so that's the one thing that's definitely true.
SPF more than others.
Having the most overlap of any of those two groups on the Venn diagram.
Yeah, I think that's really interesting. Sorry, one quick thing to mention too, like on your point that I thought was really worth bringing up too, is if you're someone in this space that wants to see it grow and genuinely believes that it has this capability to become a backend for the majority of mainstream, you know, tech in some way or another, then there has to be this point of actual onboarding of communities that wouldn't have otherwise gotten on board, right? And so that's really this inflection point that I feel like Polygon has been making a big push into, where it's not saying, hey, I'm going to like build something that's DeFi native and it's so amazing that everyone who's not DeFi native is going to get it and understand the value proposition immediately. I feel like that's what half of the community is batting for. And it's really, really hard, right? Versus the easiest way to get there is to build infrastructure that is needed and interesting for these people, but is 90% familiar to something that they know. And then all of a sudden they only have to spend 10% of their time learning crypto instead of 100% of their time, right? And so that's like one of the really interesting ways that I feel like that the Polygon team has done a good job of kind of approaching a lot of these partnerships. Sorry, go ahead, Matt. Didn't mean to cut you off.
Yeah, well, I mean, I was just going to say, like, I think if I had to put like one word around the last quarter for Polygon, it would be germination, right? Where we've sort of gotten the seeds planted and they're starting to grow their first leaves. They're starting to peek out from under the soil. So on the partnership side, like we're starting to see like, you know, we have Starbucks Odyssey going into beta, right? We have like NFT like integration with Meta, big announcement from last quarter. We have the first like I'm gonna get technical now. We have the first like client release for the testnet for Supernets, which are our like app specific blockchain solution. And then we also have the testnet for the ZK VM going into not just one, but this is the second version of the testnet, which is meant to be the last one before mainnet. It's produced 250,000 blocks. How cool is that?
Very cool.
So
can you actually jump into each of those last two things in more depth? First, talk to us about like what is ZK EVM, what are supernets, and then what is like the proof of stake chain changes that have been happening recently, and how do all three of those things kind of play into the broader Matic thesis?
Yeah, I think well, if you think about the broad Matic thesis, right, the way that it's commonly pitched internally, at least, is we want to be like the AWS of distributed compute, right? So on AWS, you might start out as like, you know, just like an early developer. Maybe you're just messing around trying to like get a side project off the ground. And for that, you'll deploy your app to like a shared server where you're actually like sharing that hardware with other people in real time. the equivalent here would be Polygon POS, right? It's like one common chain. It's relatively cheap to transact on. It doesn't have the same like security guarantees or uptime guarantees necessarily as, you know, if you own your own server, and we'll get to that in a second. But it's the right place for developers when they're starting out and experimenting. It's like the place where you go to start launching your app. For us, that's Polygon POS, and it was, you know, for Polygon overall, it was where we started. So that's the blockchain that's like up and live today. And we underwent like a pretty big upgrade to the client software there to do a couple of nice things. One is to make it substantially less like to address the reorg issues, which now we're getting real technical, but you know, block reorg is where like a block that was done some number of blocks ago gets swapped out for an alternative block, right? Generally speaking, most blockchains are probabilistic. So Bitcoin, you know, you have to wait for your transaction to clear in order to like be able to spend your Bitcoin. That might take 6 blocks because the further deep, you know, the deeper you get, the less likely it is that you have a reorg. So Polygon in the past has had, I would say, like a little bit of issues with reorgs, nothing like that generally has caused too much concern. Like we still have centralized exchanges listing native Matic, right? But you know, we don't want to live in a world with reorg chains, and so we've done part of our software upgrade to avoid reorgs in the future. So it's great to see that, right? The second thing is we're smoothing out gas fee adjustments. So, you know, we've all been there, right? You're trying to mint something, trying to get a transaction through. Oh my God, gas is crazy. And, you know, like maybe you looked this morning and gas was fine, but now like everyone else is trying to enjoy the same NFT mint that you are, and there's just competition for the chain. So in the past, there's been some parameters that we've adjusted that made it a little bit jumpier in terms of gas fees. And so we're smoothing those out just to create like a better user experience. So, you know, we're really concerned with the experience from 3 angles here, right? We've got user experience, developer experience, and validator experience. And so every like step we take in terms of software is meant to improve the usability of this tech for all 3 of those constituents. So that's POS. Should we jump into SuperNets?
Yeah, SuperNets, and then maybe specifically, like, given that we just did the partnership talk, maybe like through the lens of how a partner could potentially use it too.
Yeah. So, I mean, SuperNets, I'm extremely excited about. I think that there's just really strong product market fit there. And I think we're going to see some early successes coming very, very soon. So SuperNet's just backing up to the AWS model, right? You have your like shared server where you're sharing the chain with everyone else. And, you know, at some point you might find that like the overall throughput of your like required transactions just doesn't, it's hit a point where like the proof of stake chain POS is like no longer at the scale that you need. So one example I like to give is like Starbucks Odyssey is like live in beta, right? And you know, the number of transactions there might be on average 1 every 10 blocks. It might be less, it might be more, but it's not really like pushing the boundaries of what the chain can provide. But you can imagine in someday in 20, 30 years, when Starbucks might want to put all of their transactions on chain, that wouldn't work with the shared POS chain model, right? They would need their own SuperNet. And so this is really like an app-specific chain that can provide you that higher level of scalability. And it also gives you more flexibility as a developer to sort of limit the functionality of your chain. But by doing that, you know, so maybe I can't deploy a smart contract on Starbucks chain, but like I wouldn't need to. All the products that are available there are Starbucks's products, right? And so this is akin to like owning your own server on AWS. And maybe at some point you own a rack, right? And then if you're Netflix, maybe you own a building or several buildings on AWS campuses. And, you know, then that brings us kind of into the third product, which is, and we'll come back to the partnerships in a second, but just while I'm like laying out the groundwork, I think we should talk about ZK VM, which is, we'll be deploying live in mainnet soon. You know, we're still undergoing audits. We want everything to be secure, right? But this is exciting because it can provide you a higher level of safety than you would otherwise
Sorry, what's
get.
ZK EVM? Take a step back even further. Yeah.
Yeah, so ZK is zero knowledge, right? And it's named that for these zero knowledge proofs. And generally when people talk about ZK and crypto, you've got like two angles, right? There's privacy and scalability. For us, our primary focus right now is to enable scalability, to bring Ethereum to the masses, right? And so we're focused on using these zero knowledge proofs to securely scale the number of transactions that can get done in a block on Ethereum. So it like directly inherits the security of Ethereum in a way that, optimistic, you might have heard of optimistic rollups or other layer twos like won't, right? And so for mission critical apps where the safety is like of the utmost importance, things like DeFi, right? Like if you're an institution, if you're like you or me, like we're bridging our stuff to like God knows what chain, like in the bull market to like buy whatever, who knows what NFT, right? And like yield farming and stuff. But if you're institutional, you can't really be taking that kind of risk. You can't be sending your money over custodial bridges. You need to, because if something goes wrong, your investors, your LPs, no one's going to be happy. So this is where ZK comes in, right? It offers that scalability without the trade-off of security. And for a lot of application developers, that's going to be enormously important. And for a lot of blockchain users, like the people that Colin and I interact with every day, that's just like, it's non-negotiable, right? Having like that level of safety. So that product went into testnet in Q4, and we're targeting, I think, first half of 2023 for the release to mainnet. But you asked about SuperNet's partners. So we've got, I think we've pretty much got our initial like cohort of partners that we're going to launch with roughly lined up. I think we have 10. And generally the thing about SuperNets or app chains in general, right, is it's actually a marketplace, as weird as that sounds. So you have this, you have on one end of the market, you have people that need security. They need secure decentralized block space, and they have products, they have development. So these are the developers. On the other hand of it, you have like the validators, right? People that are willing to provide security in exchange for some kind of reward. So that could be pretty flexible, right? It could be block rewards. So maybe the SuperNet has its own in that native currency, and block rewards are coming to the validators. It could be as simple as just USDC getting sent directly from the developers to the validators. But they require some kind of payment to keep their servers up and running to reach that consensus, right?
Yep.
And so if you think about where Polygon's advantage lies within the like app chain world, this is really the core strength, is that we're experienced at building partnerships. And so we have partnerships with people that are going to want to validate these things. We have partnerships with infrastructure players that are able to provide the hardware. We have partnerships with developers, obviously, it's like, it sounds kind of silly, but like Starbucks could be a developer in this context, right? Not them necessarily specifically, but you know what I mean. So people that want to deploy chains, that's who I'm calling developers. Yeah. So we have some pretty exciting progress on that. So we have our EVM client, right? That's just like the software that validators will run to run these blockchains. We have that ready in testnet. We have auditing on all of the software. It's started. It's not finished yet. We have 5 implementation partnerships and a lot of other tooling providers. This could be things like, block scanners or like RPC providers, like the sort of infrastructure layer of all this stuff. It's not the sexy end of it, but it's definitely necessary. And then we have over 10 clients that, over 10 like developers that we're trying to onboard. So we're targeting to be production ready by the middle of February, awesome. With the official launch coming March 20th. We're going to do it at the Game Developer Conference in SF. So, you know, the other things we have planned are just like the release of like the native bridge, the indexer, relay or account abstraction, just like things that are going to make the user experience really, really nice. Because you know, I think for this especially, like if you think about the user experience or the customer journey as they start using a SuperNet, it's going to be product specific. You're going to be on the game's website, signing up for the game, and they'll be like, here, click here to install your thing to MetaMask and set up the account abstraction that you need to do and bridge your tokens. And so all of it needs to work super smoothly because, you know, you have a whole other blockchain that you're getting into this person's hands. And, you know, setting up a new blockchain is like not an easy proposition. And if you only have one use case for the chain, you need to make it as easy as humanly possible for people to come in.
Absolutely. And I have one more quick question before we really dive into another topic, but that's kind of the last thing I wanted to think about is when you see deals with some of these other developer communities that are a little bit different, like let's say someone like a Robinhood versus a Starbucks, it almost feels like they may one day become consumers of some of the other side of the developer community on Polygon, right? Where it's like, hey, there's like this Web2 developer community that can be consuming DeFi security effectively, or there could be like a Web2 community that's looking to consume DeFi developers, right? And so where do you guys, if you have an opinion that you're able to share, kind of see this progressing down the line? Is it almost like a Polygon app store of dApps that can be accessed through like these retail browser wallets? Like, where do you see this kind of heading down the line?
I think that generally the way I would think about it is Polygon more as a technology provider rather than like an app store, if that makes sense. Like we're like the AWS here rather than the Apple. I think generally our aspirations are very focused on like blockchains. As weird as that sounds, like that's still like our core product, right? Is shipping out tech to allow people to do decentralized compute. Everything else is just like bringing more use cases in and like showing people what's possible.
Awesome, appreciate it. Okay, let's get further into what's up next for 2023 for Polygon. Yeah. One thing I really want to dive into, because I had a chance to read Colin's article that he published. I think it was in NASDAQ and maybe even a couple others, right, on tokenization. That's been something that we've had a chance to talk about on these webinars pretty extensively. It's something that I personally think is extremely important for the future of crypto. Without spending too much time like on the basics of tokenization, like specifically for like an institutional audience, Colin, what do you think are some of the biggest pluses of on-chain tokenization kind of moving into the next couple of years?
Yeah, I think the high level is that blockchain represents an order of magnitude step function improvement on existing technology. And it's kind of crazy. I think it's crazy, but what we're really talking about is rewiring the entire foundation of the global financial infrastructure. And it's a huge topic. And I almost like, even when I talk about it, I'm like, that sounds really, really wild. But my landscape view is shaped by all the conversations that I'm in. And I think people in this industry have been a little bit tired of hearing like the institutions are coming. And so they kind of gave up. But the reality is that this has been very quietly progressing for a long time, for years. 2023 is the year of tokenization and institutional DeFi. I just don't see any way around it. Based on the players that we are in dialogue with that are announcing within the next 3 to 6 months, and they're all announcing except for 2, by the way, and I can't share them because that would just be boxing people. But everybody else is.
Can you give us the first letter?
Well, from A to Z, it's everybody except for 2. So, and by the way, some of this ties into what Matt was saying in terms of like, well, why would you need a supernet? I mean, if you're talking about like permissioned access for some of the banks, I think I'll probably have Matt do the technical deep dive on that. But the 10,000-foot view is that for instance, I guess for a bank, very specifically, tokenization has the ability to save tens of millions of dollars in costs and in infrastructure. Like the settlement infrastructure on Wall Street was built over decades and decades. To some degree, it works. In some places, it works less well. but all of it is you know, it's kind of antiquated. I mean, for lack of a better word, right?
You don't like settling T+2, Colin? You're over it?
I mean, I know there's a lot of pros to doing that, but there's also a lot of cons. And
I'm actually a T+2 maxi, so I'm a little turned off right now.
But for a lot of people, there's definitely pros. So we talk about like the cost savings. For large asset managers, there's the ability to shift distribution from just qualified purchasers, right? People worth $5 million or more, like the pension funds or the guys that kind of can play in that space, to really accredited investors, like people that verify that their net worth is, I think it's like $1 million, and maybe your income is $200,000 plus. And it's a very, very significant paradigm shift in the way that assets can be consumed. Like, we are truly talking about the democratization of finance here. Very specifically, what that means. There's a fund that I looked at recently, and this is a partner, Polygon. They had a 30% return. Call it a private equity fund, 30% return before fees. Mm-hmm. And that's over the course of 10 years that the vast majority of people don't even have access to that fund. Right. And so you think about the idea like, okay, you're a guy and you're a person, you want to save for retirement. Right now, S&P is probably your best bet, 8 to 10% annualized. What if you could access something in the 15 to 20% that is being driven by the smartest people in the world, highly, highly paid people with all the access to information that prior to this, only really rich people had access to? And, it's funny, I was actually talking to my dad about this the other day. And I said, listen, dude, what if your congressman came to you? Because there's reasons why not everybody has access to this stuff, right? It's because, Congress, the SEC, the federal government, they're actually protecting people from a lot of scams, a lot of hedge fund managers that would say, hey, I have a hedge fund, I'm going to get you really high returns. And then people go in, and then there's like a consumer protection issue. But there's another issue, especially in America, where Americans are pro like making their own choices. Right. And so basically my thought was like, Dad, if your congressman came to you and he said, I'm protecting you against 15 to 20% returns, like as the average American, what would you say to them? Because I'm a public facing individual, I would probably say thank you, but no thank you. My dad had a very different response, right? As I think would a lot of people. So think about the idea, the end goal of this is like, and that's just in America. Like, forget about the people that say, okay, I make a couple $1,000s a month and I live in India and I want to save for my future retirement. I want access to these financial products. Like, we want to be able to give them someday the ability to buy a fractional share of Tesla in order to give them equal access to financial products that a lot of people here in the US have. It's like truly like democratization of assets on a global scale. Like, that's part of Polygon's mission that I see happening this year. Right. And so they say, you think of the idea that like people get acknowledged in public for the work that they've done in private over years and years. I tell people, just watch the Wall Street Journal. Like, you are going to see very public prints and it's going to feel like it came out of nowhere. But for me, it's like, because we're in these conversations, I've never been busier. Matt has never been busier. Like, we have no time to do anything. I had the misfortune of giving a speech at TechCrunch right after FTX. And the challenge for me is it feels like a bull market. It feels like the wildest time in history where the whole world under the surface is being rewritten. And I had to say, I've never been more bullish on crypto. In the meantime, everyone's looking at me like, what is this guy on? What's happening here, right? Because the headlines are so dark. And I think that, again, in the next 3 months, you're just going to see it. Larry Fink, founder of BlackRock, got up on CNBC the other day. He said, I can't wait until derivatives and equities are tokenized. And that's a big, very deep market. And think about the ramification of that. How wild.
And FX, right? There was the FX trade between Singapore and JP, yeah?
100%. And Matt, I think I might have you give everybody kind of the TLDR on that one. But like, it's just like a colossal paradigm shift taking place. And it's been taking place under the surface. The first and second quarter of this year, it's going to come to the surface. Like, there's no one that's paying attention to the financial markets that's not going to see this stuff in action, because everybody is going to be enacting blockchain enabled technology. And it's not like Wall Street. Like there's a lot of people that said, okay, we don't like that paradigm anymore. We're going to rip down that infrastructure and rebuild it. It's actually somewhere in between, because a lot of it, quite frankly, is just going to be integrated, right? It's gonna make our traditional institutions that much better. And quite frankly, in my view, like more egalitarian for everybody, which I think is it's a critical kind of a moral issue for people in crypto. It's kind of like why we work in crypto in a lot of ways. But I think you're going to see that happen. You're going to read about it all the time. Like you won't be able to avoid it. Matt, if you want to kind of give your thoughts on that, I think you might also have a good angle on that one as well.
Yeah, I mean, I think my angle is slightly different, right? Last cycle, we heard a lot of talk about tokenization, right? And at that point, the ethos was very, very egalitarian focused. And as great as that is, and as much as like I'm behind that, what we saw was a lot of demand for tokenization coming from the people with the blockchains, not necessarily from the people with the assets, right? This time we're seeing demand to put assets on the chain from people with the assets. And it completely changes the paradigm. Because all of a sudden, you know, last cycle where we saw excuses like, I don't know about the regulatory environment, right? Or how am I going to do my KYC? This cycle, we're seeing people that directly have the incentive to get this done, and they're going to figure out the answers to those questions. And we're seeing more and more solid answers coming out every day. So, you know, for me, this is like very exciting, right? Because it's got all of the promise of what I was believing in and excited about at the peak of last cycle. But it's actually coming to fruition. And I think it's, you know, it's going to really change the way that a lot of people access capital markets, right? If you can raise money on chain, or, you know, invest money on chain in like highly like regulated, high quality products, that changes the shape of the like consumer facing financial infrastructure quite a bit. And so being able to do all of that in a fully permissionless, like transparent, like now, you know, and I shouldn't say fully permissionless because some of these products are very permissioned, but you know, in a place where the ethos carries that kind of these kinds of ideals, it's super exciting.
And I would add two things to that really quickly, and one would be the demand side, because there's a lot of people that see the reason for the supply to create tokenized products. But on the demand side, you can think of like you're a pension fund manager. The onboarding process for specific funds is very onerous. Think of the idea that you could have a menu of things on chain. It just makes it so much more easy to use. And then you get 24/7 liquidity on top of that, right? And so when I think of like a step change improvement in service and access to specific investments in technology, like that's one of the ideas that I think about. That's why people will want to consume these things. So the way that I think about the next 2 quarters is the whole infrastructure is being built out at 1,000 miles an hour right now. There's people issuing, there's the people that are, you know, tokenizing things, which is the supply. And then there's the demand, right? Call it like the institutions that actually want to buy this stuff. And then the third leg of that triangle, the third leg of the three-legged stool is really like kind of where does it trade in the aftermarket, right? Is it DeFi? Is it CeFi, and how? And I'll tell you, just given the amount of conversations we have and the quality, that's all coming together like in real time right now. And I think the results, by the way, I'm so excited. Like I think the results, once this stuff is like implemented, the announcements are made, these guys are open for business, I think it's going to be fascinating.
Oh, awesome. That's really exciting stuff. And I think one of the things that I didn't hear you mention, but I'd love your thoughts on, is it seems like the sort of tokenization for even the most DeFi native audience out there, right, will ultimately be a huge plus, because even if you don't care at all about any of the products being brought on chain because you're the most crypto native person out there, what should end up happening is better risk adjusted rates of return across the board, right? Because they have to compete with more traditional products that are now being offered on chain. Do you see that as a potential factor, Matt and or Colin, for like the DeFi native audience as a result of tokenization?
I think, you know, it's not, I hadn't thought about it specifically that way. I'm not sure that I believe, actually, this would be really interesting to see data on. Like, does the like optimal frontier hold across crypto assets the way it does across like equity portfolios? But one thing that I've thought a lot about is like, once you have like, you know, I think we're targeting February or March for the Shanghai fork of Ethereum, where you'll be able to like unstake your ETH. Once you have that, the ETH staking yield becomes a much more like real thing, right? Like today it's theoretical, but once you actually can unstake, the way that it's going to function, like we'll quickly move into like whatever the long-term like state of the world is, whether that's most of the ETH being staked through liquid staking providers, and then you use your liquid stake tokens to do other things, maybe through eigenlayer, you stake other networks, I don't know. Or like, you know, if that's like much of the ETH being you know, not staked because like people find that, you know, the more ETH that gets staked, the less staking rewards you get. Whatever that final state of the world is, we're going to kind of start converging toward that once withdrawals are enabled. And so it brings up interesting questions like, where does the ETH like yield fit in, right?
Right, because it's still relative to off-chain rates in some form, right? Because that's then the relative opportunity cost.
It basically has to be. And like, you know, you can think about the opportunity cost, right, of staking ETH, when you could be taking that ETH, putting it into Aave and borrowing USDC, taking that off chain and earning 3-4% on it, right? Like the machinery does exist to compare ETH staking rewards with the off chain yields, right? But it's not quite mature until you have that like off ramp as well. And so it'll be really interesting to see, like, you know, you think about like credit spreads, right? And like where should ETH be trading as just a bond, right? Relative to like other like, you know, sovereign debt, right? When countries issue debt denominated in their own currency, that's effectively what ETH looks like once withdrawals are enabled. I do think we're going to see much more integration between the like on-chain and off-chain world, and especially when you think about a product like a treasury coming online, where like if, you know, like there are ARB opportunities there, right? If treasuries are trading at a more attractive price on chain, you're going to borrow USDC on chain against your treasuries, maybe just to buy it up, right? And you're gonna, you know, and if treasuries wind up trading at a premium on chain, you're gonna maybe borrow USDC, you know, originate these assets off chain, bridge them, and then like, you know, capture that arbitrage there. So it'll be really interesting to see the sort of like shuffling in. I picture it almost like a zipper, right? Where you have these like on-chain yields and off-chain yields, and there will be some sort of layering, like a stack of like relative risk and return. And it'll be interesting to see just how much more that becomes tied in to the overall financial system, you know, like in the coming years. I know you're big on ETH yield as like, you know, ETH staking rewards as like the not the risk-free rate, but like the base rate, right? It's the LIBOR effectively. And then everything else should offer a premium there. Yeah.
And it gets even more interesting when you actually start to have the counterfactual of that, which I'm always really interested in. That's been incredibly hard to solve for crypto, is the fact that like not everyone is ETH or Bitcoin denominated investing in crypto, right? Like some people want to be denominated in their local fiat. And if that's the case, you don't actually have good baseline rates for those currencies, right? And so tokenization all of a sudden starts to offer a compelling alternative for users or for investors that want to hold local currency on chain, or even for institutional audiences that have a mandate to deploy on chain, but like, let's say, don't want to be super long shitcoins right now or whatever it is, right? And so there's a lot of different kind of interesting edge cases here that I think tokenization really enables in terms of creating more efficient markets on chain, and even for an institution, giving them more opportunities for like arbitrage and for creating efficient markets, right?
That just brought up a very like wild idea. This is like a little off topic, but I'm gonna throw it at you.
Okay.
So okay, if you think about USDC, right? Like, why does that product exist? It's because Circle is effectively inhaling all of the yield that you can get on dollars, right? That is their revenue. It's great business model, right? But if we had higher quality, like, you know, T-bill originators on chain, then it's a little bit similar to like ETH versus liquid staked ETH, right? So if you think about like like I feel like there's no reason today why NFT markets, for example, should be denominated in native ETH. They should probably be denominated in some sort of yield-bearing ETH, right? Just for capital efficiency's sake, right? If you're sitting there and you're providing a bid on an NFT market and you have to have that ETH locked up anyway, you might as well have it locked up in a yield-bearing form where, like,
or even liquidity pools, right? Like, why am I LPing ETH, like whatever, ETH-matic? Why am I not LPing staked ETH and staked-matic, right? And then I get double yield.
Yeah, I mean, and we've seen like very high quality growth of staked-matic, by the way. But exactly, like you should be earning maximal yield. This is the way of markets, right? Like this is the natural end case of things, right? Similarly, why am I not holding liquid staked dollars, right? where those dollars are invested in some kind of treasury bill or something. You know, like today, if you think of historically, if you ever bought T-bills, it was like with dollars that you would then have to like go through the hassle of selling the T-bill in order to get anything done with that capital. Now, because of the composability of all of this stuff, you could have T-bills instead of stable coins if you're like allowed to hold them. And everywhere that stable coins are sort of the de facto like currency, we could just be using like, I'm going to call them liquid staked dollars, right?
Believe it or not, I actually know someone working on this, so stay tuned.
Oh, that's cool. Yeah, you should. Hopefully they're working on it on Polygon.
We'll see. No, I think it's fantastic. And like tokenization is one of those really, really kind of boring vanilla use cases on the surface, but then once you dive in and realize all of the things that it enables on a secondary level becomes one of the most incredibly interesting kind of levers for blockchain to pull over the next couple of years. I want to also be cognizant of time because I realize we're really coming up on the end of our 45 minutes here, but want to give you both a final chance to kind of say, all right, as we look forward, whether it's Q1 of 2023, whether it's full year 2023, Colin, I know you threw a bunch of stuff at us as like, I'm so excited for this. If you were going to choose kind of one thing to look forward to and specifically really differentiate Polygon over the coming 3 months or 12 months, whatever it is you want to say, what would that be? I'd love to hear that from each of you to kind of end on a high.
It's really hard to distill like the differentiator because there's a lot of them, right? Polygon is doing so many things, right? NFTs, gaming, DeFi, tokenization. You know, from the institutional seat, what I see is all of my conversations around tokenization, and they're massive. I mean, they're from all the largest players in the world, including banks, central banks, countries, large asset managers. You're going to see those print in the next, 1, 2, 3 months. Like you're just going to see it coming. It's amazing. Like now is the time. I realize there's a lot of people that have put a lot of hard work in for years to get us to the place that we are. It is all coming now. And so I would say like, that's really where you want to focus your attention. Like I personally couldn't be more excited. I can't wait to see these announcements start to hit. And I think that quite frankly, that is what's really going to validate crypto for the world. And quite frankly, blockchain. Because there's kind of this idea where, Jamie Dimon, JP Morgan, he's I would call him like negative on crypto. I think it's safe to say that. He's actually pro blockchain, believe it or not. And I think now is when you're going to see kind of that those ideas, like where they stand with the broad swath of the institutional community. It's going to be very visible for the first time. I think
really stratifying the differences between like blockchain as a financial tech and crypto as just like a random digital token.
100%. Yeah, 100%.
Appreciate it. That's very exciting stuff indeed. What about you, Matt?
I mean, I'm a little triggered by the blockchain, not Bitcoin mantra that I remember from last cycle. Look, if I'll pick two, right? So like most of us, I'm focused on the tech, and so over Q1, like over the 3-month horizon, the thing that I'm most excited about is SuperNets going live. I think that's going to just accelerate like in ways that I think none of us have really imagined. the accessibility of blockchains for just the broad population of Earth, right? Where like we have if you look at Q4, it was really, really strong for Polygon adoption. Like we had 10 million monthly active wallets on Polygon NFTs by the end of Q4. That's a lot of wallets, right? Like it's not necessarily one person, one wallet, but boy, that, you know, there's probably a lot of people behind that. Think about the steps that it takes to get into the Polygon NFT ecosystem. It's not easy, right? If you think about SuperNets, what they give you is this product, right? Where you're coming in, you're like, I know why I'm doing this. I want to interact with this game, this company, this community, right? And I want to be, I don't really maybe even care so much that it's crypto under the hood or not, right? I just want to be doing this thing where like I can get a little bit of value out of it, or entertainment or whatever.
Yeah. And so Reddit's the classic example there, right?
Yeah, where like they digital avatars instead of NFTs, massively successful, right? I think that kind of like I think to a degree that totally works. For some people out there, we are crypto native, we are Bitcoin, not blockchain, right? We love this stuff, right? But for a lot of the like broader population, it's going to come down to like which use case really brings them in. What causes them to do that first on-chain transaction? For me, it was ENS, right? But like I'd, you know, bought crypto prior to that, but like I'd never actually done anything on chain. For me, it was ENS, and I just thought that was the coolest thing, right? For a lot of people out there, it's going to be games. It's going to be, you know, things like Starbucks reward NFTs. It's going to be, you know, digital identity, like the Reddit avatars. We've got like multiple Fortune 500 companies in like a bunch of different sectors that are in talks with us about SuperNets now. And so I think, you know, you're going to see a lot of good reasons to do your very first transaction on chain. And I think that like really nailing that like product like first angle is going to be absolutely killer. On the 12-month horizon, as I'm a bit of an Ethereum maximalist myself, and the most exciting thing for me right now is zkVM, right? Really having like a safe way to scale transactions in, and you know, with like really hardcore like plans in place to decentralize every part of that. That's going to change the game on Ethereum scalability, right? And I think like it moves Ethereum into this place where it is the global settlement layer. And Ethereum, being an Ethereum killer is going to be more of like a con than a pro in the near future, right? What you want to be is Ethereum aligned. You want to be an Ethereum helper, an Ethereum scaler. And I think that's what Polygon has really nailed. And so when the zkVM goes live on mainnet, that opens up a huge number of use cases as well. And it opens up the floodgates for like, if you're like a whale, you don't really feel secure with the existing layer 2 solutions, right? If you're, God forbid, you're a public company, right? How could you possibly, you can't be like, oh yeah, I'm trusting XYZ bridge because 7 out of 8 validators are like down with it, or, you know, or, you know, like there's been a lot of talk recently about like, how centralized are the existing layer 2s? And the answer is they're pretty centralized. And none of us wants it to be that way. And so we should all be excited about improved technology coming in that's really going to make it possible for institutions to have a way that they don't have to feel bad about at the end of the day coming into this, right? Where they're not having these kind of trust issues the way, like, I hate to like point to FTX and be like, look at what happens when you trust, right? Because I think it's a bit of a tired like meme. But, you know, look at what happens when you trust too much. So I think, I'm really excited about SuperNets and zkVM if I had to pick just 2 things.
Oh, wow. Thank you both so much. Had a fantastic time chatting with you as always. If you enjoyed tuning in, please check out Matt, check out Colin. If you're an institution, reach out to them. Get involved. And otherwise, thank you all for tuning in, and looking forward to having you guys back on next quarter to hear some more exciting updates about what's been getting built in the ecosystem.
Thanks, Jack.
Thanks so much, Jack.
Okay.